Hello, Level Up community. Today we're covering incentive stock options in an IPO context, specifically when exercising and holding the options instead of selling immediately. Let's go over what this approach involves, including the AMT consideration and future tax reporting. So when a client decides to exercise and hold their ISOs, especially after the company goes public, it's important to be aware of the tax effects. So we have to make sure the client have the cash to buy the shares. So in this example, the client has 100,000 shares with a $2 strike price, and the fair market value at the time of exercise is $40. So this $38 difference per share triggers AMT income. Since the shares are not sold immediately, there's no ordinary income, but AMT does come into play. For AMT purposes, the difference between the fair market value, which is $40, and the strike price, which is $2, creates a delta of $38 per shares. So with 100,000 shares, this results in 3,800,000 in AMT income, which needs to be reported on Form 6251. So to avoid a large AMT hit, clients can consider a partial exercise strategy, exercising just enough shares each year to stay below the AMT threshold if possible. So after exercising, it's essential to track both the regular basis and the AMT basis for future tax reporting. The regular basis is $2 per share, totaling $200,000, while the AMT basis adjusts to $40 per share, totaling to $4 million. So if the AMT triggers a tax payment, it generates an AMT credit which is tracked on Form 8801 and can be used in future years to offset regular tax. So when the shares are eventually sold, say at $50 per share, the total proceeds are $5 million. So for the regular tax return, the gain is $4,800,000 calculated based on the $2 regular basis and is reported as long-term gain on Schedule D. So for the AMT return, we report a $1 million gain due to $40 AMT basis. So to reconcile the two and claim an AMT credit, we enter a negative adjustment on Form 6251 to capture the difference in the gain calculation. So when selling after holding, some tax strategy might help minimize the impact of capital gains tax. So if the stock qualifies as qualified small business stock, there could be exclusion available for the gain. Alternatively, you could defer taxes by reinvesting in an opportunity zone. So for filing, you'll need Schedule D for the regular tax gain, Form 6251 for AMT basis adjustments, and Form 8801 if you have any AMT credits to apply. So I hope this clarified the tax process and tracking needs for exercising and holding ISOs after an IPO. So thank you for taking the time to go through this with me today, Level Up community. That's all for me.